Greetings, everyone. My name is Cedric Chuuma, and I am joined today for a very, very exclusive and special segment, the third quarter outlook with Mphaso Banda from Kukula Capital. Mphaso, how are you doing?
Good, thank you. Thanks for having me on.
Glad to have you on. So, this is a particular special segment between Financial Insight Zambia and Kukula Capital, where we'll be looking at the third quarter macroeconomic outlook for the country of Zambia. Now, before we get into that, perhaps we'd like to learn more about Kukula Capital. So, Mphaso, could you tell us about Kukula Capital and what you do?
Right. So, Kukula Capital is a fund management and advisory business. We've been operating in Zambia since our founding in 2009. And since then, we've invested in a number of businesses, but also advised a number of SMEs and even large corporates. We've helped them raise capital, we've helped them restructure and reorganize, and we've provided them with strategic guidance to help them grow their business here in Zambia. But for the past 1 year or so, we've embarked on a fundraising journey for a new private equity fund, the Zambia Green Outcomes Fund, and that's together with our co-fund manager Green Crowd and our partners Zanaco and WWF. And the mandate for that fund is to invest in renewable energy and sort of related sectors. So we're looking at utility scale, grid-connected energy projects, off-grid energy, and also more novel areas like electric mobility as well. And of course, my role there is mostly centered around investment research and, helping our clients raise capital and providing them with strategic advice as well.
Oh, that's really, really amazing. Amazing work that you're doing. Before we get into the macro outlook, the big elephant in the room, and I think the biggest news we got over the previous quarter was the debt restructuring deal. About just over $6 billion worth of debt was renegotiated. Are you able to explain what debt restructuring is and what does it mean for Zambia?
Right. So the basic idea behind debt restructuring, if you're a debtor and for whatever reason you're unable to pay your debts as and when they come due, you could approach your creditors to restructure or reorganize your payments so that you can continue to pay down your debt, but in a way that's sustainable and that you can continue to operate. Of course, that's the position Zambia found itself in 2020 when it suspended its debt repayments. And of course, that's had dramatic negative consequences for our exchange rate and also for business confidence generally in Zambia. But over the past 2 years, of course, we've been waiting for quite a while for this restructuring to happen. And, finally we have a deal on $6.3 billion worth of debts owed to bilateral creditors. And the idea is that an agreement on these debts will provide us with some sort of flexibility in the near and to some extent even long term, and give us some visibility on what our repayments will look like and help us plan better for the future.
Oh, that's amazing. So in the context of the $6.3 billion debt deal, I think you mentioned it's mostly bilateral creditors, but what are the key points to take from this deal?
Yep, so the deal relates to $6.3 billion worth of debt owed to bilateral creditors. So these are creditors or credit that's been provided by official agencies from other countries to our government or institutions that are backed by the government. So ZESCO, for example. And the deal does not cover private creditors, so there's another $6.8 billion worth of debt that's owed to private creditors, and that's not the subject of this agreement. But there are a number of important features in the existing agreement that covers our bilateral debts. So you have tenor extensions, you have a reduction in the interest rate on our debt as well. There is a debt service suspension, and that will be enforced until 2026. You've also got the inclusion of ZESCO arrears in the restructuring, and you've got the exclusion of local currency denominated debt from restructuring as well. So quite a number of things in the agreement, but perhaps starting with some of the simpler things, the tenor extension. So what they'll allow us to do is basically increase the period of time over which we'll repay our debts, but we'll be repaying that debt in smaller installments. So the basic idea there is it will allow us some amount of flexibility to allocate resources to other sectors of the economy where we do need the financing. Of course, government spending is directed to healthcare and education and other areas of the economy. So with that extra freedom, we'll have more resources to allocate to other areas of the economy. You have the lower, or what we refer to as concessional interest rates, which are just very favorable interest rates that you wouldn't otherwise be able to get in the market. Of course, paying debt over a longer period of time, it would be very unfortunate if we were saddled with a very substantial interest expense. You'd almost end up back where you started. So that we have low interest rate on the debt is good for our fiscal flexibility. You also have a suspension of our debt repayments up until 2026. So, the idea there is the same, that in the sort of very short term, we do need quite a bit of flexibility to invest in other areas and get other programs going. So that's the basic thinking behind that. And then you have the inclusion of ZESCO debts in the restructuring as well. So ZESCO, of course, is central to economic activity here in Zambia. It would be hard to grow without a well-functioning energy utility. So that does give confidence to potential investors in the energy sector that you do have a sort of state utility that will be in a sort of stable position. As an investor in energy, especially utility scale projects, usually it would be the state-run utility that would be the buyer of power, and it would be very difficult to initiate new projects if the buyer of power is in a very uncertain financial position. So we should see, and we have seen, sort of renewed interest in investing in Zambian energy, and of course, to some extent, that's where funds like ours come into play. We're quite interested in both grid-connected and off-grid energy projects. So the next issue is the exclusion of local currency-denominated debts from restructuring. So, of course, a lot of investors were concerned about the status of local currency-denominated debt and whether those would be subject to this restructuring agreement. It's since been made clear that those will be excluded from the restructuring, and we expect that investors will be more confident in investing in local currency securities like treasury bills. The thinking is that we've had a lot of investors waiting in the wings, waiting to hear what the outcome will be of these negotiations. And now that we have a firm position on that, we should see some renewed interest and demand for those local securities. Of course, that's beneficial for Zambia because, where you do have high demand for those kind of securities, it tends to drive down the yield, which effectively means that government will be able to reduce its cost of borrowing. So that's an important development.
I think that's quite a very, very concise explanation of the debt restructuring deal. You have mentioned that in the restructuring deal, local currency denominated debt is not included in the deal. Does it mean that local debtors are also not included in the deal?
Yeah, so Zambia finds itself in an interesting position. So, like you've mentioned, typically government will play a leading role in financing infrastructure projects. There are a number of things that will make financing infrastructure projects in some way a bit more tricky. You've got an adjustment to the framework for public debt management, which will limit, first of all, the amount of debt that government can raise to finance infrastructure projects. And of course, in general, the current administration has taken a bit more of a fiscally conservative approach to managing the country's affairs. So we'll expect that government financing of infrastructure will be somewhat subdued. But we do expect an uptick in private sector participation in infrastructure investment. And you can sort of see that in government's policy around it and enhancing the PPP or public-private partnerships framework so that you can facilitate better investment into infrastructure and also so that the state can structure good deals between private investors and itself. Again, this is kind of an area that funds like ours are looking to capitalize on and investing in areas where there are gaps, and in particular, energy and mining.
In light of the debt restructuring deal, what is your outlook on infrastructure investment in the country? I understand that a significant part of the debt was contracted for infrastructure investment in the country.
Right. Yeah, so typically government would take a leading role in investing in public infrastructure. So that's roads and power plants and those kind of things. But considering our government's more conservative leanings in terms of managing its fiscal affairs, it's unlikely that we'll see the same levels of financing, at least in the sort of short to medium term, directed towards infrastructure, at least coming from the government side. We expect that private sector will play a much larger role in that, and it kind of seems to us to be government strategy, this sort of two-pronged strategy where you focus on energy and mining, which are complementary. And I guess the angle there is that in the long term, those two sectors will help drive FX inflows. Of course, when you sell copper, you tend to sell it in dollars, and the same goes for energy. And that should have some stabilizing effect on our own economy and help us build up our FX reserves. But that still leaves quite a number of challenges. Of course, energy does not tend to employ permanently a lot of people once the projects are operational. It tend to employ quite a number of people when you're building the project, but to operate them, far fewer. Mining a bit better, you do tend to have a larger standing headcount. But the reason I bring that up is, of course, the big drain on government resources is this huge public wage bill, which we feel that at least for the medium term will crowd out quite a lot of room and funds that would otherwise be allocated to infrastructure spending. So we expect that government will try and position itself to attract as much private capital as possible. We see that in the enhancement in the sort of public-private partnerships framework, so that you have a better framework, first of all, for managing the sort of private sector and state relationships, so that you can craft better deals. I think we all know historically that we've struck some deals that maybe didn't benefit the state the way they should have, and of course the enhancements to the framework are aimed at improving exactly that. We are seeing also quite a lot of external interest, from entities that are looking to invest in Zambia and to invest in those particular sectors. Yeah, I think that the outlook for infrastructure investing will be heavily reliant on private capital. And of course, FDI is the number to watch for that. There may also be some mobilization of, other public resources, but that are internal. There are a lot of, institutions like NAPSA and other such schemes that perhaps with changes to their mandate will allow them to invest a bit more broadly. So that's potentially also a source of financing for infrastructure going forward. But our view is, of course, a bit more of a conservative approach from the government with an increased reliance on private capital to finance infrastructure.
Yeah, that's actually very good for our country, I would imagine. Now, going to our currency, right? I think we saw an appreciation of the kwacha, especially in light of the announcement of the debt restructuring deal. So what does the debt restructuring deal mean for foreign exchange stability as well as for our trade balance?
Right. So generally the impact, we expect it to be positive. Of course, you have more certainty around our government's obligations and what will be expected to pay. And that sort of reduces your risk outlook. People perceive you to be less risky. So we expect some sort of stabilization in the exchange rate. It was volatile, sort of leading up to the announcement. We didn't see as much of a sharp appreciation following the announcement as we expected. Our best guess is, the market to some extent did expect some or other agreement. And perhaps it was already priced into the prevailing exchange rate. But we do expect it from the levels it's at now, which is sort of between 18 and 19, to sort of stabilize around 18 and perhaps strengthen to around 17 over the medium term. In terms of our trade position, I think there are a number of factors to consider there. You've got copper, which is, I think, a key talking point, and that also ties in quite a bit with our exchange rate. Copper production has been weak for the past few years, actually peaked sort of in 2020, and has been declining ever since. And of course, that's our largest export and a big driver of FX. So a reduction in copper exports means we have less FX coming into the economy, and that tends to have a negative impact on our own currency position. So a combination of, firstly, weaker copper output and an increase in imports has actually seen our balance of trade for the past 2 quarters or so skewed negatively. And that would tend to suggest that there is an outflow of dollars from the economy. Our outlook is that if you have an improvement in some of the performance in the mining sector and a resolution, especially at operations like Mopani and KCM, we'll be able to then take advantage of the sort of relatively high prices that we're seeing in the copper market. It's unfortunate that our low production has tended to coincide with a sort of very hot market for copper. Of course, the drivers for that are renewable energy and sort of things along the green value chain. And I think, of course, we all know that this country is heavily dependent on copper exports. So, but in short, I think in the sort of short term, a bit more stabilization, but sort of a reduction in volatility, and sort of a sort of gradual appreciation over the medium term would be our assessment.
Wow, that's very good news for the country as well. Yeah. You've mentioned copper production as being important to our currency stability. But I think over the years, would you say that the correlation between our foreign exchange stability, currency stability, has increased or decreased in correlation to copper production?
Right. So I think there are a number of factors. I think if you look narrowly at the past sort of 5-10 years, there's been a bit of a detachment between the price of copper and the performance of our exchange rate, or our currency rather. And I mean, there are a number of factors there. So as much as you've had quite high prices, I mean, we have had some production challenges. I mean, you have had generally, I'd say maybe over the past 5 years, a bit of a negative outlook on Zambia. I think the fundamental picture had been a bit weak. So I think there are some sentiment factors. I think in terms of actually benefiting from some of the production as well, I think there were some gaps in tax collection. So you didn't necessarily see the uptick in copper prices feed into, say, an improvement in our international reserves. And I think there are also sort of non-mining related sort of factors. You had perhaps very lax fiscal policy as well, and perhaps spending in areas that perhaps didn't generate the kind of results that we would have expected. But we do expect, that with the sort of enhanced tax policy around mining, that we will start to see an improvement, first of all, in international reserves, and that should help stabilize our FX performance and sort of normalize the relationship between the copper price and our own currency. So, yeah.
Wow. Yeah. Now, inflation has been a very, very big issue, not only globally, but also locally. Now, in light of the inflation, what do you think of the direction of interest rates over the near term to long term?
Right. So our view is that we're quite close to the top, if not at the top of the rate hike cycle. I think that there are a few examples of markets where inflation is cooling down. Inflation is tending to cool down in the US. I think in South Africa, which we are big importers from, I think the street view there is that they're quite close to the top of their rate hike cycle. And I think if we look narrowly at Zambia, I'd imagine Bank of Zambia at its next MPC meeting will maybe take a wait-and-see approach, maybe hold off on hiking rates and rather see how the news of the restructuring is received by the market before looking to up rates. Of course, raising rates is a good tool to help cool inflation, but you do tend to slow down economic activity. So, our view is that the Bank of Zambia will perhaps take a check on hiking rates this time round. But of course, inflation in Zambia is largely driven by energy. So of course, we're entirely reliant on importing refined fuel products. So a lot of our inflation is as a result of a lot of external factors, so high energy prices, high food prices, which is a global issue. But we are seeing that in other markets, inflation is tending to subside. So we do also believe that, with inflation cooling off everywhere else, we'll start to see the same here in Zambia as well.
Okay, and what's the outlook for the economic growth of Zambia in light of the current developments, as well as GDP projections?
Right. So for this year, I think there's a statement out from the Ministry of Finance sort of citing a reduction in copper output being a big reason why they've cut their growth outlook to about 2.7% for the year. We tend to concur. Of course, weak copper production, that translates directly into our GDP. Of course, we expect that, once there's resolution around, in particular, the big mining operations like Mopani and KCM, that the improved copper output will help drive some of the growth. Of course, growth in the energy sector as well. In the medium term, we do think that will sort of get our growth up to the levels that we would more like to see, around 4%. And then, of course, also the gap in the middle, which is production and services as well. I think we're yet to see which direction Zambia takes, whether it leans more towards, being a manufacturing-based economy or perhaps leans towards services. But in the short term, of course, weaker output will definitely mean lower GDP. But the outlook is brighter in the medium term, and especially as we start to see some of the capital come in from private sources, and also those projects start to materialize on the ground, we'll see a pickup in economic activity. So,
all right. So, Thank you so much for being part of this outlook. Now, I would ask you to say one final thing to investors there that are actually watching this outlook show. Let me rephrase that. Yeah. So thank you for being part of this show. I think you've shared quite very insightful information. Now, what is your word as Kukula Capital to potential investors out there? What is your sentiment of Zambia's growth and current economic prediction?
Right. So I think firstly, Zambia's open for business. There's a lot to do here. I think generally the conversations we've had with companies looking to enter the market is they're quite excited about the direction Zambia is taking and sort of the reduced risk outlook. And I think now, especially in context of the restructuring, I think there's a bit more visibility in terms of the way forward for Zambia. And I think that the sort of the preconditions, both from an administrative sort of perspective and having the right kind of policies in place, I think that's taking shape. And I think it's a good market to be in. We're centrally located. We are neighbours to 8 countries, so it's a great operating base if you're looking to do business in Africa.
Oh, I'm bullish on Zambia too.
Yeah,
yeah. And it's been such a pleasure having you for this third quarter outlook. Looking forward to the next outlook as well. This has been Cedric Chuuma, and I was joined by Mphaso Banda from Kukula Capital, and we had the third quarter macro outlook for the country of Zambia. And thank you for tuning in, thank you for watching, and get to know.